Okay, this is problem 3.8 on page 77 in your book. And it gives you an income statement there that they're forecasting, but the CEO wants higher sales. He wants to generate at least 2.5 million in net income. And it also tells us that our operating costs, excluding depreciation and amortization, are 55% of sales, and depreciation and amortization interest expense will increase by 10%. The tax rate is 40%. So, they want our CEO wants us to have a net income of 22.5 million. So all we have to do is we can find our EBIT. We can just take our net income. We can just work backwards in this problem like we've done previously. Take our net income divided by 1 minus our tax rate's 40% to get 4.16 million. We can find our taxes by just multiplying by our tax rate, which is 40%. And you'll notice that the net income is the difference between these two. Our interest is 10% higher than it was last year. Our previous interest we see was $600,000. So we can say our previous interest is 10% higher. We just multiply our interest times 1.10. 600,000. We could just add our earnings before taxes and our interest to get our EBIT. Our depreciation is also 10% higher. So we can just, here's our previous depreciation times 1.10. And then we can find our EBITDA by adding our EBIT plus our depreciation. Now our sales are 45 or 55%. Our EBITDA is 55% of our sales. So that would mean that our sales would equal our EBITDA divided by 1 minus 0.55. There we go. That's right. Have to get the formula in there right. You had to put your parentheses around it, or it wouldn't work right. So B5 divided by parentheses 1 minus 0.55. Now our operating costs are 55% of our sales. So we just say sales times 0.55. And you'll see that our EBITDA is sales minus our operating cost. So there's our answer. If we want to have a net income of 2.5 million, we need to have sales of 12,681,481.